Hey everyone, Ben here and welcome to Motivation to Invest. Baillie Gifford is an investment firm based in the UK and they're basically the UK version of ARKK. They were one of the original Tesla bulls and actually had Tesla as their largest position before the major bull run. And the company has been around for over 100 years. So basically, this is one of the best performing funds at the moment. So I'm going to dive into the top 3 stocks of which Baillie Gifford has been buying. So this is going to be a really exciting video, guys. Lots of valuable content in this video. So be sure to watch all the way till the end, and I think you'll like what I've got for you. And before we hop right in, if you do like these investing tips and exclusive stock market picks, feel free to join the investing family if you haven't already by hitting that subscribe button and turning that notification bell on. And remember, if you do find any value in this video at all the research which has gone into it, feel free to give this video an early thumbs up. That helps out tremendously with the channel. And remember, guys, if you do want to access in real time exactly which stocks I'm buying, selling, and my entire investment portfolio, and also dive into our ultimate investing strategy course, if you do want to become financially free, details on that and more can be found first link in the description below for those of you guys who want to step up your investing game. And with that being said, let's dive in. Hopping in right here, guys, Baillie Gifford has over $178 billion of assets under management, and they generally focus on growth stocks. So hopping into stock number 1, of which Baillie Gifford has been buying, and that is Coupang with the ticker symbol CPNG. And this is basically the Amazon of South Korea. Baillie Gifford paid an average price of $46 per share for this stock, and this is the beauty right now. So since Baillie Gifford was buying this stock, the stock's actually down 19%. So this means it could be an opportunity to purchase this stock at a cheaper price than Baillie Gifford actually bought in at. Now, I have covered Coupang before, but I'm going to hop into it one more time for you guys. So hopping into the share price right here, the company IPO'd in 2021, as we can see right here. And then since then, I did do a video on it. I said, Coupang, I love the company, but the stock's overvalued. So since then, the stock has slid down 23%. Market cap 64 billion. Is Coupang still overvalued, or could it be a buying opportunity? Well, we're going to find out in this video, guys. Hopping into what I like about Coupang straight off the bat. So Coupang is a market leader in e-commerce in South Korea. They also compete in the food delivery market. They had high revenue growth, over 70%. The company is founder-led with a large insider holding with skin in the game. So that's one of the main traits I look for before investing into any company. And the company is now expanding into Japan and Singapore and trying to replicate their business model, which they created in South Korea, of really like Amazon plus 10. So Amazon, but with extremely exceptional customer quality and customer experience. For example, the people at Coupang will know when they're delivering a package if there's a baby in the house, and they'll know not to wake the baby by being a little bit quieter, or they'll know if it's somebody's birthday and they can wish the person a happy birthday. All this and more is done with a really customer-centric approach like Amazon does in the US, but just a little bit better. Now, it must be stated, apart from the gigantic size of Amazon compared to Coupang doesn't have a cloud computing business, which is one of the main profit drivers of Amazon's growth. So what's my valuation and buy point for Coupang stock? Well, let's hop into the numbers right here. So I've filled in all the details here, guys. This is my advanced valuation model, of which I've plugged in all the numbers for. If you guys do want to access this valuation model and all the others as part of my stock research platform, then be sure to check out that first link in the description below. You can access my buy points for over 50 different stocks and just see when is the right time to buy a stock and when is it overvalued. This is vital information which could help you guys improve your investing decisions and ultimately become financially free from investing into the stock market. Hopping in right here, so I've predicted revenue growth for next year of 60%, next 2 to 5 years 50%. So plugged in the numbers. I've been quite conservative for this high growth company, and I get a fair value per share of around $25 per share. Now the stock's currently trading around $30 to $35 per share at the moment. So ideally, I do want to be investing in this stock at that price at $25 per share. Okay, stock number 2, of which Baillie Gifford has been buying, and that is the Trade Desk, ticker symbol TTD. Now, Baillie Gifford paid an average price of $77 per share, and since then the stock's down around -1%, so similar price of what they were paying for this company. Now, this was an add to the position, so this wasn't their original position. This was just adding to the position. It's around $77 per share. So hopping in right here, here's the share price. Trade Desk has been on a rampage over the past year. So if we go back from the April 2020, the crash, we can see the stock's up since then 373%, so major gains, and it was up nearly 500% at the peak in 2020. So there has been a correction down now, 18%. It did correct down around 30%. It has recently rebounded up by 40%. So I believe, from my calculations here, that at this point here, May 2021, when everybody was saying, oh, the market's terrible, this is when Baillie Gifford saw an opportunity to add to their Trade Desk position, of which they seemed quite bullish on. So since then, a nice 54% gain just in the past 3 to 4 weeks. What does Trade Desk actually do? Well, Trade Desk is basically a platform which connects digital advertisers with content publishers. So basically, when you go onto a website and you see all these different adverts on there targeted at you, let's say you go and look at some trainers on Nike, and then you'll get targeted with those same trainers. Most likely those adverts on specific websites will be from Trade Desk. Now, the beauty of Trade Desk, what it offers these advertisers, is the fact that Trade Desk has all these different platforms, so we can optimize the ad spend for these major companies like Procter & Gamble and many, many more. So they know the exact place to place their ads, the type of ads to place, and the amount of ROI they can get from that advertising. And they take a commission of 20% from the advertising spend. So that's a huge commission for their services. So what are the competitive advantages of this company? Well, the first competitive advantage is the company operates a feedback loop. So the more advertisers on the platform, the more content publishers will want to be on the platform. So this could be website owners. And the more of both these demand and supply side guys on the platform, the more data the company has. So the company also has a data moat, which is continuing and growing over time. And the company's also founder-led with skin in the game, which is one of the main traits I look for. So the founder here, Jeffrey Green, has 9.3% of the company. So this is one of the main traits I look for before investing into any company. I want to be investing with the owners of the company because I know if they're shareholders and we're shareholders, they'll have our interests at heart. Now, there are some risks with this company. So firstly, competition. There's a lot of competition in this space. Of course, we've got Google, the main advert provider. We've got Facebook with their Facebook ads. And then we've also got a few smaller players which are similar to the Trade Desk. So we've got Adobe, we've got MediaMath, and we've also got Ezoic. So I actually own a travel website as well, which I'm part owner of. We use Ezoic, which uses artificial intelligence to place ads on our website, townandtourist.com, if you do want to check out some travel info. But what's my valuation and buy point for the Trade Desk? Well, currently diving in here, I'm predicting 36% revenue growth over next year and then 35% over the next 2 to 5 years. So with those numbers, hopping in, I get a fair value per share of $28 per share. Now, the stock currently is massively overvalued. It's $76 per share. So again, I love this company. I think it's a fantastic company. It ticks all my boxes in terms of software platform numbers, the fact it's a marketplace, founder-led, etc. It's just egregiously overvalued right now. So this is one I will be watching also. Okay, stock number 3, and this is Docebo with the ticker symbol DCBO. And this was a new buy by Baillie Gifford, and they purchased this stock for an average price of $49 per share. Since then, the stock's up around 14%, but this still could be an opportunity as it's a small cap company. Hopping into the share price here, this is an extremely interesting company. So it was founded in 2005, but it really is quite a new age software player. So $14 per share, the stock's up 280% over the past year, which is incredible returns. Around $2 billion market cap, that's in Canadian. So what does this company actually do? Well, this company offers a learning and development suite for enterprises. So enterprises are basically large corporations, and when they want to train their employees all over the world, they can split it up and it can be expensive and also complicated. Whereas Docebo, it basically has this cloud-based platform, and it is really quite a smart platform, and the company can actually design all their educational materials for their employees in one place. So let's say they need to train their sales team, their marketing team, their engineering team. They can have it all in one place. Now, this company is trusted by over 2,000 brands already from across the world. We've got Amazon Web Services, we've got Walmart, we've got Coca-Cola, Heineken, and many, many more. They have 91% of their revenue is recurring, which I love. It's a software company, again, which I love. High margins, Hopping in right here, guys, I'm predicting 55% growth for next year and 50% for the next 2 to 5 years, which is roughly in line with what they've been doing previously. And I get an average price of this stock right now of $57 per share. It's currently trading at 56, so it's really close to its fair value right now. However, guys, as this is quite a speculative stock because it's a small cap and they're basically expecting huge growth in the future, I would like a margin of safety before investing. That's just a personal preference. So that's today's video, guys. I hope you did find this video valuable. If you did, feel free to give it a big thumbs up. That helps out tremendously the channel. Remember, guys, if you do want to become financially free and actually step up your investing game and stop messing around with investing and just trading and just doing it in an amateur way and actually want a professional framework to just attack and actually become a successful investor, then be sure to check out that first link in the description below for our ultimate investing strategy course. So I'll leave you with that note, guys, and I hope you all have an incredible day either way, and I'll see you in my next video. Invest safe.